Alrighty, folks, we're going to play up, down, or sideways with the one and only Taylor from Life Goal Investments. How you doing, buddy?
I'm doing great. Thanks so much for having me. This is a fun game. Let's do this.
All right, folks. So if you don't know what up, down, or sideways is, it's basically, hey, where do you think the stock market and perhaps other assets will be going as we move through Q4? Yes, folks, it's October 2nd. We are in Q4. I can't believe it. But we're going to talk about where's the stock market. I'll choose the S&P 500 so we all can kind of watch this. Taylor, what do you think? S&P 500 up, down, or sideways from today on December 31st or January 1st?
Yeah, so I think that we're going to get a marginally positive return through the end of the year. Marginally. I think
All
that
right.
we still have stocks at valuations that are stretched. I still think that the Fed is now getting the credence that they deserve, saying higher for longer, which are headwinds. But at the end of the day, I also see a massive pile of outstanding capital that is sitting in money markets. That if we do get a pullback in the market, we'll hit the bid button and come back in and start to move back into the stock market.
Yeah, so just so people can play the game along with us, I have 4280 for the S&P, so you're talking slightly positive, so you're what, 43, 44, 4500, somewhere in there?
Ballpark. Yep. Yeah, that's
Yeah,
fine.
what the heck. All right. I like that.
And I will say this, not a whole hell of a lot of confidence behind that. Full
Yeah,
disclosure.
yeah, you're just playing a game that you didn't even know you were gonna play. So I like it. I like
I,
it.
I I said this, so let me do it a different way. So
Okay.
that's the reality of what I think probably happens. Seasonally strong period of time. You generally
Yeah,
have a good October into the season end rally into holiday season.
yeah.
But at the end of the day, I think the reality is there's kind of three different unique directions of the market moving forward. So the one that maybe was just described there, and I don't know that I'm saying that this is great, but is kind of like that Goldilocks, that
Yeah.
Goldilocks where things aren't perfect, but directionally the Fed seems to be kind of controlling inflation without raising interest rates too much and forces it into recession. So that's where
Yeah.
stocks churn out modest returns. And I think there could be some big sector rotation within
Mm,
stocks. So that might
yeah.
play out. That's
Yeah.
situation one. Situation two is, oh boy, either this has already taken place or it's going to take place. The Fed raises rates too much and forces us into that recession. And I'm not saying between now and the end of the year. I'm just saying going forward.
Yeah.
So in that scenario, you don't want stock exposure, right? If we move into recession, you want the defensive exposure of bonds, treasuries, safe havens like golds, etc. The
Yeah.
third
I like it.
situation is the one that we saw in 2022, where you have inflation start to creep back into the market and get away from us, and the Fed doesn't track it down quick enough. An inflationary environment is not good for stocks and bonds. We saw that play out in 2022, and that's where you need kind of the third leg of the stool, like the Treasury inflation protected securities TIPS, or real assets like real estate or timber or hard precious materials. So like those are the three things. And I guess I'm just hedging my comment earlier of like stocks going up. I don't have a ton of confidence in stocks
No.
going up. I think there's a fair likelihood of either one of those scenarios playing out. And the portfolios that you want in all of them are vastly different.
Yeah. Not a lot of confidence. Three very different options. Oh boy.
No, did I just
Uh,
hedge the heck out of myself there?
yeah, you did. You did. You gave me a non-answer just like a politician, but that's all right. I like it.
Correct. I
How
did.
about oil? How about oil? I got oil now just on the CNBC app. Let's call it at 90 bucks. Up,
Yep.
down, or sideways by January 1st.
Sideways. I think you have continued pressure on the upward trend, but I think if you have pressure up towards 100 or something like that, I think what you'll have is some of these big world oil producers like Saudis step in and say, okay, we're willing to put more out there at $95 a barrel because our profit is so darn good at that rate. Their job was to correct the downward spiral that was being
Right.
experienced in oil, and they've done that, obviously.
There you go. Well, why don't we switch to gold? We don't talk about gold a lot here. I have gold. Let's call it at 1850. Do you think as the economy weakens or grows that maybe gold gets a bid or gets sold off?
I think there's a chance that gold gets a bid, because at the end of the day, two of the large outstanding risks there are is you have inflation pick back up, so there you have that, and on the other side is like recessionary timeframes when gold is a safe haven, and those two have that gold momentum bid potentially being placed behind it.
All right. Well, why don't we switch to what is often called digital gold and Bitcoin? Bitcoin's got a great bid this morning, up $1,000. Just took out the 28,000 level. What do you think? Up, down, or sideways by the end of the year?
Holy smokes. This is one I will admit that I am not a category expert on by any stretch of the imagination. I'm not a believer at this point until we get some tangible use of these assets. So now, granted, you may say, "Hey Taylor, you've been beating this dead horse," but again, I started in 2021 when gold, when Bitcoin was at 66,000. So
Yeah.
when it was down in that 15, 16 range and held that really well, I
Yeah.
actually was optimistic on it. But that's probably the only time in history that I've been optimistic on
Yeah.
Bitcoin, full disclosure.
Yeah, one of the things that, again, I have no idea about, you may have more clue on this on Wall Street, is there clearly seems to be momentum around a Bitcoin ETF, and not
Yep.
only one, but several. We're talking Fidelity and BlackRock and
The biggies.
the biggies, right? And we're not talking about, ARK. We're talking about the biggest of the big. They're going to get one, and they're probably going to get several. I can't imagine that not creating some kind of bid underneath Bitcoin. Again, I'm an outsider looking in, so you tell me if I'm wrong. But
I think that's a fair assessment.
yeah,
I think that what you've probably seen is you've probably seen a fair amount of that get priced in from that move from 15,
moving ahead.
16
Okay.
to 26. But I think what that creates is potentially a perpetual bid, right?
Yeah.
Because then you have that new money, that person that's 65 years old that never was willing to touch anything, that they had to keep in a thumb drive at their house, which is
Yeah.
ridiculous, but that's where a lot of people keep their crypto. And instead they're able to go in and say, hey, Mr. and Mrs. Financial advisors, could you buy me a chunk of this? Because I'd like 1% exposure, like you
Yeah.
have, Michael,
Yep.
to say, if this thing rips, I want to be there while it rips.
Yeah. 1%. I've had it for several years. I'm happy I do still. All right. So
When did
let's
you
get, when did
when
I
did you
buy?
enter? Yeah, do you
18.
know?
I paid 19, 18.5, 19 for my Bitcoin. Yeah.
Awesome. So you've been underwater on that for a very, very short period of time. You've
Yeah.
been you've been positive almost the entire time you've owned it.
Yeah. And I think my Ethereum was like, I think I got some at 900 and up to like 1300. So it's about 95% of my portfolio are those two. And then I have some what turned out to be shit coins that are worth zero now. But yeah, the other
But
ones
hey,
I have.
you took a flyer with a very small
Yeah.
position.
I talked to a buddy who's deep in it. He's got 8 figures in it, and he gave me a couple. I threw it in, and I crapped out, but that's okay. It
Yep.
happens. Thank God I have 95% in the two big boys. All right, now bonds. We'll stick with the 10-year. Again, like all these, we'll just round to the nearest tenth. We'll talk the 10-year today at 4.7. What say you, up, down, or sideways?
So there is upward pressure right now.
No
So
doubt.
it would not shock me to see this get up near that 5%. But that being said, I think by year end, it comes back in. We are
Okay.
now on 3 years. And I believe, don't take this for gospel, but I believe this would be the only time we've ever seen a 3-year number on treasuries that are negative. So a
Hmm.
3-year number at negative returns, which is just really not indicative of what safe haven assets have done historically.
Yeah,
And therefore, I
that's
think
not a safe haven.
right, right. You see a negative 3-year return, that's not safe, right? And
Yeah.
so I think that probably there is some reversion back to the mean. And right now you have the ultimate bid sending treasury bond yields higher and prices down. I think it probably moderates itself here relatively soon.
I wish I remember who wrote this article. I read so many things every day, but they were talking about the 10-year perhaps potentially, again, just mathematically, potentially returning 20% next year. And how does the 10-year produce 20% return? We hit a recession, the Fed cuts rates, you buy the treasury at 4.7, it then trades at 2.5. Bingo bango, you
Boom,
make 20%. It's
boom.
possible.
Yeah, I mean, you look at TLT, and TLT is longer dated treasuries, 20 to 30-year paper, and it was down at 1.40% or somewhere in that
Oof.
ballpark. You're talking about government guaranteed paper.
Yeah.
So that's TLT is a treasury bond ETF, right? So with that, if you have that negative movement and that accelerated movement upward in yields driving bond prices down, there is absolutely the chance that it reverts back. And the swings, especially on the longer end of the treasury curve, can be violent.
Yeah, it's going to be wild to watch it. We've been through a pretty wild 3 years. Reversion of the mean will eventually happen, and it'll be one that's written about in the history books. But Taylor, where can they find you, or closing thoughts?
Yeah, well, I'll just say this last thing. What'll be interesting to see is if we actually get a washout, right? You've been talking a lot
Yeah.
about the rolling recession. does the rolling recession play out, or do we actually get this knee jerk, things are getting
we're
bad,
here.
and we get this, significant drawdown. It'll
Sucking
be
sad.
fun to watch.
Yeah, I agree. Where can they find you?
Yeah, find us at Life Goal Investments on both Instagram and TikTok. We appreciate you, Michael.
Awesome. And again, folks, let's send some love and congratulations to Taylor, his wife, and his entire family welcoming baby number 3. Thank you,
Number
buddy.
3, thank you so much.